In this video, we'll explain the two main parts of the Union Budget, Revenue Budget and Capital Budget, with simple examples to help you understand them better. We've already covered India's first budget, what the Union Budget is, why it matters, and the constitutional requirement that makes it mandatory. Be sure to explore the other videos in this playlist for more insights. The Union Budget is divided into two main sections, the Revenue Budget and the Capital Budget. Here's an overview. Let's begin by explaining the section, the Revenue Budget. 1. Revenue Budget. We'll explore the Revenue Budget in greater detail in a separate video. This is just a brief overview. The Revenue Budget focuses solely on the government's current income and expenditures required for its day-to-day operations. The Revenue Budget is divided into two categories. Let's start by discussing the first one, Revenue Receipts. A. Revenue Receipts. Revenue receipts are the government's earnings that help fund its operations and services. These include tax revenue, which comes from taxes like income tax paid by individuals and businesses, GST collected on goods and services, customs duty charged on imports and exports, and various other tax sources. In addition, the government earns non-tax revenue from sources such as dividends from public sector enterprises like ONGC, SBI, and other public sector enterprises, fees for services like issuing passports, interest on loans given to states, and fines for violations, like traffic offenses, and various other non-tax sources. These revenues play a crucial role in supporting the government's financial needs. Having briefly covered revenue receipts, let's now move on to discuss revenue expenditure. B. Revenue expenditure. Revenue expenditure includes the costs the central government spends on daily operations and welfare programs. It covers salaries for government employees like teachers, police, and military personnel, along with pensions for retired workers. The government also provides subsidies to make essentials like fertilizer for farmers and LPG fuel more affordable. Additionally, funds are allocated to welfare programs that improve healthcare and education for the people. Now that we've briefly discussed the revenue budget and its two components, revenue receipts and revenue expenditure, let's move on to the capital budget section. 2. Capital budget. The capital budget is like a plan for the government to invest in the country's future. It includes spending on big projects like building roads, railways, and power plants, creating new things that people can use for a long time. It also manages government loans. This helps the country grow and improve over time, making life better for everyone. The capital budget plays a vital role in shaping the country's future. By investing in infrastructure, like highways and railways, it boosts economic growth and makes the movement of goods faster, helping businesses thrive. It also creates jobs, as large projects like building roads or factories need workers and materials, benefiting many industries. Additionally, investments in public projects, like power plants, often generate money for the government in the future. Now that we've briefly discussed the revenue budget and capital budget, it's important to know that the Union Budget also includes other key components that provide a full picture of the government's financial planning. We will dive deeper into important budget-related concepts like fiscal deficit, revenue deficit, primary deficit, contingency fund, consolidated fund, and other key topics in separate videos for better clarity and understanding. I will be adding separate videos to explain the revenue budget and capital budget in detail, using simple real-life examples to make them easy to understand. Don't forget to check out the other videos in this playlist for more easy-to-understand details.